to mod. Hello audience, good afternoon everyone. I am Sushma to moderate this session. Thanks for taking your valuable time to make this webinar a knowledge sharing initiative from ADP useful. Today's webinar, Designing a Simple Compensation Structure. This is yet another interesting webinar from ADP Payroll Series. It's an initiative from ADP to help and guide the HR leaders and key decision makers of organizations manage sensitive aspects of the HR process as per the business trends today. We aim at providing the maximum inputs to the audience with the latest market insights. Our presenter for the day is Mr. Ramesh Dayalan. Mr. D. Ramesh, Associate Vice President, Implementation and Compliance Services at ADP India, has 14 plus years of experience in compensation and benefits, payroll process, statutory compliance, business process improvements, and he is a certified Six Sigma Green Belt. He has vast experience in compensation structuring, salary-related tax advisory services, and individual tax planning. Before starting this session, we would like to thank once again each of you for having taken your valuable time to join us. I wanted to inform that all of you would be put on listen-only mode. We encourage our viewers to put forth questions that are related to today's topic and agenda. We will be pleased to answer those in the end of the session. Thank you once again, audience. Over to Mr. Ramesh.
Okay. Thanks, Sushma. Thanks for the introduction. Good evening, all. My name is Ramesh. So today the topic is an interesting topic because most of the organizations they will be thinking, how do we provide a compensation structure which will be simple and also it has compliance with labor laws and taxation requirements, and also the objective of making the compensation structure is to make sure that how do we increase the take home of the employee. So considering all this in mind, today we will cover this following topics in the webinar for the next 45 minutes. The contents are, how do we classify the salary components? So what are the, in terms of looking at a very high level classification on the salary components, what are the elements will go into the classification of the components, the governance and compliance which you need to keep in mind while designing the compensation structure. And we also shared you some the sample salary component structure. We just want to show it to the participants. And if you have any questions, feel free to ask at the end of the webinar. So let's go back and understand what is this salary components, how these entire salary components are being structured. If you have to look at as a classification, one is the entire salary is being divided into 5 major parts when you are giving a compensation to any of the employees. The one is, which is fixed salary, which you will pay month on month, is a fixed element. Then there is something called reimbursement, which goes into the salary package, which will be paid against the submission of expenses incurred or claims. Then there will be certain non-monetary or perquisites will be also be provided as part of the compensation. So we will get into the details in the subsequent session. So let us try to understand what are the non-monetary benefits and perks. Then there will be something called deferred payments, where this is not fall under either the fixed salary or reimbursement or perquisite, but these payments will be made only on a deferred basis. So it's not being paid on a monthly or claim. Then we also come across that retirements and social security benefits are also goes into the components of salary. So all these 5 elements of salary is typically called as C2C, that is cost to company. So this is how the compensation structures of an employee is being broadly classified under these 5 heads. So let's go back and understand what are those elements goes into this 5 broad components. So there's fixed salary. So there are certain components are being paid as fixed salary, which is your basic salary, house rent allowance, conveyance or transport allowance, child education allowance, special or other allowances. Your n number of allowances are available. So each company will have their own policies in terms of designing those allowances as per your compensation policy. Then you will also have a reimbursement component, part of the salary. These reimbursement components are medical, LTA, which is leave travel allowance, petrol, vehicle maintenance, driver salary, telephone. So these are some of the reimbursements you come across when an organization is providing any components as part of the salary. There are certain non-monetary and perquisite benefits are also being generally included as part of the salary for certain senior level executives, which is company provided car, company provided accommodation, fixed and movable assets, then ESOPs. So all those benefits which are not monetary in nature, so those benefits are called non-monetary or perquisites. The other component we have, the other classification is deferred payments. So these deferred payments are like bonus or performance bonus, incentives, ex gracias. All these payments will come under the deferred payments category. So it is not being paid as a fixed amount every month, or it's not a reimbursement, and this is being paid as per the company policy on achieving certain targets or achieving certain KPIs. So this is how the deferred payments are being paid. So which is also part of your salary package when you are offering to any employee. Then the companies today typically includes all the other benefits whatever is being offered to an employee. It can be in the form of retirement benefits like group medical insurance or accidental insurance or life insurances, any contribution paid by the employer towards the provident fund. Generally companies include this also as part of CTC. Then employer contribution to ESI, then any contribution the employer is making on behalf of employee towards gratuity fund, that will also be part of the retirement benefits, and it will be included as part of the CTC. Then you will have superannuation. So this superannuation schemes are governed by the company bylaws, so that will also be part of the retirement benefits. And pension funds, so you can have pension funds like NPS or any other company owned pension funds, that will also be part of this retirement benefits. So one is we have seen that there will be 5 major heads of components classification. So there are certain payments are being paid on a monthly basis, fixed amount. There are certain payments will be paid, components will be paid on a reimbursement by submitting bills and documents. There are certain payments will be deferred, and it will be paid only if you satisfy certain internal targets or achievements. Based on that, the payments will be released. And there are certain payments are being paid on behalf of employee to the government account or social security benefits account. Then there are certain benefits which has been provided to an employee where there is a small amount of value which is being included or considered while computing the cost to company. So let us understand in detail what are the components which goes under the fixed salary. So the fixed salary is typically the basic salary. So generally the company practices in the market, you can see 40 to 50% of the CTC value will be in the basic salary. So that's how organizations do ensure that the major components of the CTC value goes towards the basic salary. So it varies from 40 to 50% in generally across the industry. Then we have house rent allowance. This house rent allowance is again, companies will operate in 2 different models. If the companies are located in metro cities, then they will pay 50% of the basic salary, basically to take advantage of the income tax exemption available for HRA exemption. So the maximum exemption which is being allowed as 50% of the basic salary, you can claim it as exemption. So the metro cities are 4 cities: Chennai, Mumbai, Delhi, and Kolkata. These are the 4 cities are covered under the metro cities. So any other cities which is not covered under the metro cities, is the companies generally take as 40% of the basic. That's the maximum allowed under the Income Tax Act. Then we have conveyance or transport allowance, which is 800 per month for the employees to commute from office to home or home to office. And if the same employee is an handicap, then they can claim the maximum amount we can provide is 1600 per month. So then the other one is child education allowance, which is a very small least amount of value which is being provided as a maximum limit, so which is 100 per child per month, a maximum for 2 children. Then we do have other components of special allowances. There are a lot of components are being defined under section 1014. So whenever you are defining any component which has linked to section 1014, to make sure that the exemptions are being calculated as per section 1014. So the typical allowances are if the person is working in hill station, then they get certain allowances which are directly exempted from tax. So there are certain special allowances which are exempt from tax based on the location of employment and other things. So you can refer to section 1014 of the Income Tax Act, where there is an exhaustive list of allowances which has been provided, and the maximum amount of exemption is also provided in the Act. Then the other component we have is the reimbursement component. So the reimbursement components are basically few things like medical, which is maximum of 15,000 per annum is allowed as deduction under the Income Tax Act. This medical reimbursement is basically for domiciliary business medical expenses. This is allowed for self, spouse, and dependents. So the dependents are children's, brothers, sisters. If they are also dependent, then you can claim the deduction under this section. Then leave travel allowance. So there is no limit fixed by any income tax law or labor laws, but generally in a practice, it's been seen as 1 month basic salary generally company provides as a leave travel allowance. So this leave travel allowance, you can claim exemption. So 2 claims in a block of 4 years. So the current block of 4 years starts from 2014 to 2017. So if anyone wants to take the LTA benefit, this is the time where this is the block just started in this calendar year. So you can start availing the LTA benefits. Then there is a component called telephone reimbursement. So this telephone reimbursement, again, there is no limit fixed by Income Tax Department. This is again purely as per the company policy. So the exemption generally the people provide basically ranges from 2,000 to 4,000 per month. So you need to have a policy in your company that you are providing telephone to an employee, and these telephones are being used for official and business purposes. So in that case, you can claim the deduction from income tax perspective, maximum of 2,000 to whatever the reasonable amount. You can produce bills and take reimbursement. The people can avail this benefit. Then for vehicle maintenance and petrol, we are dividing basically into 2 categories, which is employer car and employee car. So let's take the employer car. If it is an employer car, if expenses are made by employer, if any fuel and maintenance expenses are being paid by the employer, then there is no limit for the petrol and vehicle maintenance. A number of amount can be provided. But on a practical purposes, we have seen people claiming up to maximum of 10,000 per month under this vehicle maintenance as petrol. Depends on the usage of the petrol by the employee for official and personal purposes. Then we have employee car. If the expenses are being paid by the employer, then in such case, the maximum allowed from income tax rules perspective is 1,800 per month for a small car with 1.6 cc value. If it is a bigger car, then it is 2,400 for the big car with above 1.6 cubic capacity value. So this is the maximum amount which is being defined by the income tax law. So any amount which is being paid towards as a vehicle reimbursement, the maximum exemption you can claim is as per the list given below. Then any amount paid as reimbursement beyond this value will be considered as taxable component. So other one is driver's salary. It is generally being recommended that let the driver's salary be paid only for the senior management staff. It should not be paid for all, because this has to be, there will be a detailed list of people who are being provided a driver reimbursement. So you need to have a lot of governance in place to make sure that the organizations are not getting into any contractual employment kind of engagement by engaging a driver. So we need to make sure that these reimbursements are being controlled and it is being only provided for a senior management staff. So when any driver is being provided, there is a perquisite value attached from the income tax value. It's 900 per month, irrespective of the amount paid to the driver's salary. 900 per month will be considered as per. The other one is the non-monetary benefits. So the non-monetary benefits are again divided into as multiple components are available as non-monetary benefits. We have just highlighted only few operational and day-to-day business you come across. One is the company car. So if what will be the value of benefits? So there should be a company policy for providing this to the senior management staff. So generally this company car is being provided, either company owned cars, it will be in the name of the company and provided to senior management staffs for their use, or typically company goes for a car purchase lease model. So this kind of a lease models are available in the market. So the company pay the lease rental on behalf of the employee, and the car is being used by the employee for official and personal purposes. So this is a typical kind of a non-monetary benefits which most of the organizations provide to the senior management staff, and whatever the amount which is being paid by the company on behalf of the employee towards the usage of this car through a car rental will be considered as a perquisite, and there will be a small amount of notional value will be considered while computing the compensation of the employee. The other one you come across the accommodations. So these are again two types of accommodations you come across. One is the company owned or leased accommodation, and accommodation taken on rent. So if whatever based on the type of accommodation which the employee is being provided, there will be a small amount of perquisite value applicable on this component, and the company has to make sure that the perquisite values are being taken care at the time of computing the tax. So whatever the accommodation the company is bearing for that employee, that will be considered as a value while computing the value for this accommodation in working out the compensation structure. The other one is the fixed assets. So the fixed assets are again divided into fixed assets, furniture and fixtures provided to employee for their use at home based on the notional value of the depreciation value of the asset that will be included in the compensation. And similarly, the income tax rules, perquisite rules defines the methodology and the percentage for calculating the perquisite on this fixed assets. So there is the electronics, motor and other things. So there is a defined percentage and values are being provided from the income tax benefits, which has to be considered as a perk value while computing the tax. Then organizations do provide employee stock option plan, ESOP. So this is again as per the ESOP plan defined by the company. So any shares allotted to the employee which is less than the market value of the share, then the difference between the market value and the amount paid by the employee will be considered as perk. So any sale on gain of this shares, it will be considered outside the compensation or the payroll. It will be considered as a capital gain, and the employer has to pay tax separately on that. But companies do consider this as also part of the compensation, and there will be a value, whatever has been allocated will be included as part of the CTC. There are certain other non-monetary benefits also being provided by the companies. That is food coupons, which is again 50 per day, So if you take 50 per day, then it will be 22 working days. For a 5 day a week, you can provide 1100 per month as a maximum food coupons. And there are certain organizations do provide the other benefits for the household purpose, like gas, electricity, water, any helper or housemaid, gardener support. So any benefits which are being provided to the employees, all the benefits will be included as a non-monetary benefits, and the notional value will be considered while working out the cost to company. Then we have reimbursement retirement benefits. So the retirement benefits are company contribution to provident fund, which is 12% of your PFH, will be generally companies included as part of the CTC. Then gratuity, which is 4.81% of the basic salary per month. This 4.81 is being arrived at, like if 15, as per the Gratuity Act, you need to pay 15 days salary. So 15 divided by 26 divided by 12 into 100, you get this percentage of 4.81%. So generally companies do capture whatever the gratuity which is being paid or contributed towards the gratuity fund will be considered as a cost to company while computing the total cost package for the employee. Then you will have superannuation. So this superannuation is generally governed by the company policy and the trust whatever the company is framing as per the bylaws. So this is purely the company has created an additional retirement benefits. It's not governed by any of the labor laws or government departments. So it's purely the company policy, whatever the contribution which is being paid by the employer towards the employee for the superannuation benefits will be considered as a part of cost to the company, and that value will be included in the salary components. So you will also come across recently a lot of companies do contribute for the pension fund in the compensation. So whatever the contribution made by the employer towards this new pension scheme or pension fund, it will be also be considered as part of the compensation while working out the package for the employee. So this is again, there are certain companies, they will have their own pension fund scheme which is like equal like to your superannuation scheme. So that rules and bylaws are as per the policy whatever has been defined by the company. So you will also come across insurance. So companies do consider provide group medical insurance or group life insurances. So whatever the contribution which is being paid by the employer on behalf of the employees, the same will be considered as part of the compensation. So this, whatever the demand notice they get from the insurance company, there will be a notional value will be attached for the employee for the compensation benefits. Then there are few companies will still consider employer contribution to ESI, employee state insurance, will also be considered in the total compensation package, which is 4.75% of the ESI wage. So this again varies, depends on, you have to review this every 6 months in the financial year, one in the month of April and October, to check whether any employees are falling under the ESI bracket or they are moving out from the ESI bracket. Then accordingly you have to adjust this component structure in the compensation plan. There are certain things you need to keep in mind while designing the compensation structure is whatever the components you are defining in the compensation structure, make sure that those components are in line with income tax rules and labor laws. So there are certain things which has been defined by income tax rules that the maximum amount eligible for tax exemption. So when you are defining the compensation structure, ensure that the take home is getting increased, or you have to parallelly check what kind of an impact it will have on the tax rules and labor laws. There are certain directions which has been provided by the Minimum Wages Act. So that the Minimum Wages Act also defines that for specific segment of people, there is a minimum amount of salary which has to be paid as per the state rules. So if you are deploying resources at multiple locations within India, make sure that when you are defining any compensation for the person, it has to be in line with the Minimum Wages Act. So generally, if a company is having a union, factory setup where there is a union category available. So those union employees' salary structures are completely governed by the union agreement and the union settlement you have with the employee. So there is no common compensation package you can operate on this, because each company union, they will have an agreement with the employer in terms of defining the compensation as well as the breakup of the compensation. So you just need, in that case, we need to just follow the union agreement and the settlement. And one of the thumb rule is, when you are designing the compensation structure, make sure that your basic salary is actually more than the other allowance, because if your special allowance or other allowances should always be lesser than the other components in the salary structure. Else the provident fund department will consider the entire special allowance will also be considered as a PF wage, and you have to contribute 12% on that special allowance. So it is always advisable that you need to have a clear compensation policy in place for the company in terms of defining the component breakups, and also ensure that when you are defining the component breakups, the special allowance or other allowances which has not been allocated or meant for any specific purpose should be lesser than the other components. So it's always advisable to have the compensation structure like that, so that you will not be end up in having any labor law or PF department inspections on the compensation structure. So we do have some provided a sample salary structure, how it will look. So this is how you generally come across a compensation structure. If we are putting any employee a CTC value, then you can define the CTCs as basic. There are fixed salaries like basic, HRA, transport and special allowance. This will be paid as a fixed salary. Then any contribution towards the provident fund for the employee will be considered as retirement benefits. Then you will also can abbreviate a certain amount of components as reimbursement, which is medical, LTA, telephone, vehicle maintenance and professional development reimbursement. So all this put together will be a cost to company. Then you will also have deductions like employee contribution to provident fund, professional tax, to arrive at the net salary. So this will clearly give an idea for an employee when they are taking any offer letter or CTC value. You can see that how the salary is being divided. So what are the components will be paid as a fixed salary? What are the components will be paid as reimbursements? What are the retirement benefits are included in the compensation package? So this is just a sample of the compensation structure, how an organization generally designs. So that's it from my end. If you have any queries, you can post all your queries. There is a section to post your queries. Please send your queries through the meeting.
I think we have almost reached the end of the session. We don't have any other questions to be answered by the presenter. So if you have any more questions or if you have any queries or questions, please feel free to write to us. We can reach out to you on mails. And in case of if you want to see the video of this webinar, it will be posted on the webinars page in ADP India website, adp.in, in a week's time. And we have more upcoming webinars. The next webinar is a statutory webinar about CLRA. We will share the details of the webinar shortly in our mailer, as well as please keep visiting our website to get the latest updates about the webinar. Thank you so much, audience, for your patient listening and spending your valuable time to attend this webinar. Of course, we believe it's a very good knowledge share that we have provided you with. Thank you, Ramesh, for presenting this webinar.
Hi, thank you and have a nice day.